Good morning, everyone. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, November 29th. Now, Michael Boutros. Guys, we're about 5 seconds away from the first revision of third quarter GDP. Looking for a print of 3, came in at 3.2 just now. Personal consumption pops up to 2.8% from 2.3. Slight downtick in the GDP price index. Core PCE, personal consumption expenditure, coming in right in line at 1.7%. So a pretty decent print here for the dollar. Should keep the dollar pretty well supported here to start the session. We'll go through the dollar pairs as usual. Just as a disclaimer, I'm still holding an Aussie short. We talked about that yesterday. I was just talking to you about dollar yen. Also really nice and well supported here. So as far as dollar yen is concerned, I'll come right back to the charts, guys, but I know D is holding a position we were talking about earlier. Here's what I'm looking at. There's the gap, okay? That's the Friday close. We're crossing that gap right now. So D, I still would be looking to take some off here, but 113.63, that's the level I would need to see close above to really validate the breakout for the next leg higher in dollar yen, targeting 115. Okay, so you're still looking at that 113.63 as the near-term threshold as far as the topside resistance. All right, go back to the data print again for those of you just joining. Did just get those releases for the GDP. We're still getting consumer confidence at 10 o'clock Eastern. The reason it's expected to be important today, guys, is because we're expecting a really profound uptick, 101.5. If we look at historical prices, $101.5 would be the highest since September, when we got a 103.5 print. We saw a dip last month to 98.6. Again, expecting 101.5. That comes out at 10 o'clock. So keep in mind, you still do have more data prints on tap today. More importantly, guys, we'll go over it. Actually, there won't be a webinar tomorrow. As a disclaimer for everyone here in the room, just a quick reminder. We'll be back online on Thursday. Obviously, tomorrow, no change to the schedule. Jamie's midweek strategy webinar will be conducted as regularly scheduled. But heading into tomorrow, the one thing I wanted to highlight more so than ADP, guys, is the monthly reads on PCE. The personal consumption expenditure, as I always remind you, is the Fed's preferred gauge on inflation, way more than CPI. So we got a decent print today at 1.7. The year-on-year, again, tomorrow is expected to reflect that same 1.7% print. But certainly that's going to be sort of the highlight alongside the ADP release, with non-farm payrolls looming on Friday. Any questions on today's data releases? Looking at the dollar index real quick. Here's what the DXY looks like. Again, we talked about this yesterday in the webinar. I'm still looking for near-term resistance at the yearly high day close, which was made last week at 101.69. If we've made a near-term high in price, or if this is a near-term sort of correction for the index, this should basically find some resistance at 69. If we cross that again, 102.07, the highs that we made, that 1.414 extension off the lows, which caught the high, still near-term resistance. All right, let's jump into the nitty-gritty. There's a lot on tap we want to discuss. As far as event risk is concerned, guys, really, this week, as I noted, the U.S. data prints that are on tap, you still do get the OPEC meeting in Vienna tomorrow. So for the dollar CAD, for gold, for crude prices, you could see some volatility start to pick up. The whole question is whether they're going to cut production. Saudis kind of come out and said it's not necessary that we actually might need to cut production. So it's going to be interesting to see how that pans out. Obviously, heading into the weekend, the Italian referendum and the Euro crosses will be in focus. Next week, you got the ECB on tap. So there's still a lot of event risk over the next 2 weeks, alongside, obviously, the monthly closes and open heading into the start of December trade. So do keep all these sort of main themes in mind. Last night, we took a look at the Kiwi crosses. And I'm not gonna lie to you guys, I don't have any exposure. I was looking for entry. I don't have any exposure on the Kiwi crosses right now. I did like the sterling Kiwi rebound that we saw, and Kiwi CAD also with a nice rebound that we were looking for. So we'll go over the Kiwi dollar, sterling Kiwi, Kiwi CAD. We'll go over Aussie dollar, obviously still holding a position on that. Aussie CAD, the pullback is also in play. Euro Aus, I want to take a little bit more of a neutral stance here. just on account of the positioning that we're seeing both on the euro and Aussie. We'll talk about that. D, let me know if you need to refer to dollar yen again. I think we kind of touched base on that real quick, but we'll take another look. And obviously, Conwall, if you're in the room, we'll take a look at all the commodities before closing out the sesh. All right, let's jump right in. First things up, Kiwi dollar. Here's what it looked like last night. Okay, so for Kiwi, if you recall, let me take a step back. It looks like we've made sort of this near-term rounding bottom, okay? Obviously, we made a weekly open. We came into it yesterday almost as support and rebounded right off. The risk was higher above this main key support structure here at 69.55 into 69.70. You had the Brexit low, an exact 100% extension off the high. Slope support, which you can see right here. Just a basic parallel of the resistance off the highs. So take that slope. You saw nice pivots here, resistance, resistance. Take that same slope, take a parallel off the lows. Caught that pretty nice, and now converges on that key region. So the premise of the trade was looking for a rebound off this region, okay? Near-term resistance and where, let me take a step back. Immediate resistance is 71.09. That hasn't changed since last week, but the bearish invalidation level is up at the monthly open, right up here. You got a basic 38.2, former slope support. This is off the January lows, and the 50 line, or the bisector for that top quadrant right there. This is my bearish invalidation level. As long as price stays below this, I think Kiwi's at risk for further declines. The immediate focus to start off the week was on this rebound, right? So do we have more topside to go? I don't know. Is there a play from here? I don't think so. The way I'd want to play Kiwi dollar is to either look for a rally into this region to possibly get back on the short side, or if we break the weekly open, more specifically the weekly opening range low, which is right at that 70.35 target we've been working with, that in my mind would prompt another drop into that key support barrier. I'd be looking for short entries on the way down here. So that's sort of the mindset that I have for Kiwi dollar moving forward. No change to any of the levels from yesterday. Again, from where we are here, kind of just drifted a little bit higher, still holding the weekly opening range high. All you've done so far, it's Tuesday, set a very clean weekly opening range. We'll look for that break to sort of validate next leg here for Kiwi. Keep in mind, one of the main reasons I wanted to highlight the Kiwi crosses, guys, is because you do have, although you have very limited actual data coming out of New Zealand, tonight you do have commentary by Wheeler coming out as he speaks before the Parliament Select Committee, okay, and that's going to be later tonight, 19:30 Eastern in New York. So Wheeler's known to jawbone the markets, definitely as far as, you know, saber rattling in the FX markets, so definitely look for some volatility. He comes online later today, this evening here in New York. Any questions on Kiwi dollar? Still has the risk, I think, for getting up into that 71.36, 71.50 level. But basically looking to maintain broader short bias while below this region. With that same respect, guys, having said that, if it breaks above here, and specifically with a close, I'd expect this thing to show us a little bit more of a concerted rally. This is a long-standing trendline support, as we noted on the daily chart, off of the January low. Okay, so it's a yearly trendline support, and if we clear that to the upside, you're basically looking for a rally into that 100-day moving average and that same slope that caught the highs in mid-October. Not the favorite scenario, but certainly got to have a game plan. Also susceptible to U.S. data, so keep in mind those data prints heading into tomorrow, and obviously non-farm payrolls on Friday. Questions? Hi, Mike. Thanks for yesterday's charts. I shorted pound yen at 141. It's in play and where my stops should be. Amir, let me jot that down. Pound yen. I didn't have it on the menu today. Let me put it down there. We'll take a look for sure. Well done. Let me just get through the Kiwi crosses real quick. Here's Kiwi, Sterling Kiwi. Or hi, Mike, says Graham. Kiwi dollar. Am I missing something? I just see divergence on the 5-minute and 30-minute charts. Let me check. There's definitely divergence here, Price action's pressing into a new high in the 30-minute chart. The oscillator's making a lower high. Absolutely. Again, bring it into a line chart. Quickest way to be able to identify that, you can see this high, a higher high, a lower high. These are actually tend to be very nice signals. So I would be with you 100% on this one, Graham. You're seeing divergence. Just remember, divergence in and of itself doesn't justify a trade, guys. It's the one thing I always want to put it out there. It's giving you an indication that momentum is getting tired, but by no means is that alone justification. Now, here's a support trigger on the 30-minute, which looks like it's giving out. You kind of stretched already on the stop. You're basically looking at a 20 pip stop. Not too bad. Again, initial support at the weekly open, backed by the weekly opening range low. So watch these levels down here. And until the weekly opening range breaks, guys, I would only be trading this as such, just as that, a range. We really need to sort of clear out this near-term target. Also keep in mind where the opening range low for the week is. It's absolutely paramount, Graham. So while this is the weekly open, 70.44, 70.34 is the weekly opening range low, look to the right. It's also the 200-day moving average and the actual median line stretching off the highs right there. So it's very clear to me as far as what levels I need to see sort of validated to get a little bit more conviction on the immediate bias. But till then, I'd be looking to trade the range for the week as such. Graham, does that make sense? Hey, you're more than welcome, man. Good eye. Let me see the 5-minute one that you were looking at too. You said a 5 or what was that? A 5 and a 30. Yeah. So here's where, you know what? This is actually a really good drill. I'm glad you brought this up. Graham, this was a perfect entry right here. This is something I would have been interested in 100% if we were sort of eyeing this. Here's your divergence. So you're absolutely correct as far as being able to identify that. Price action. Higher high in price. Again, on a closed basis, it's the only thing that matters. Bring it into a line chart. Higher high. Lower high. Now this one would be more appealing to me because you actually had a support trigger right here. And not only that, but look at the nuances in momentum. So in fact, once you finally broke that support trigger, came back, tried to test it as resistance, moved off, that's your validation for it actually being an operative trigger. You take a stop against the highs, looking for about 20 pips on the move lower, and you're basically there on that drop there into 70.73. Does that make sense, Graham? How you kind of walk through those? So I like how you eyed that out. Definitely the 30-minute chart has always been my go-to as far as being able to look for the onset of some divergence. You drill down to the 5-minute. Once you see those near-term triggers start to get in play, these triggers are the ones that are going to give you the best type of stop. Okay, basically you would have been looking, even if you got the late trigger there after the break, you would have been looking at a 70.95 entry with a stop at 71.03. It's basically 11 pips. That's your ideal scenario, looking for about 20. Good eye. Hey, you're more than welcome, man. Okay, so that is Kiwi dollar. Amir is saying, I also tried to short it this morning at 139. Okay, you're talking about sterling yen. I will get back to that. Let's jump into sterling Kiwi real quick, and then we'll jump into sterling yen right after. Here's what sterling Ki looked like last night. Basically, the premise of the trade is this, and I really wanted to highlight this because, as I noted, it's been a while since we talked about sterling Kiwi, but a reversal that we made off of this key resistance region last week really is what drew my attention to this thing. You had the confluence barrier of the 100-day moving average. This 100% extension, don't forget about the 100 there. Let's get rid of that. Forget about the fib ratio. It's just the 2013 lows. If I zoom all the way out, your 2013 low in pound Kiwi, which was also the stretch low here in July, the stretch low here in August. Kind of broke through, got a little messy. Once we cleared it, right to the lows, back as resistance. Add to that, there's more. Basic trendline resistance off the highs that you made there in September of last year. Take a parallel off the low from February. Resistance, also there. So you have the 2013 low, you have slope resistance, you have the 100-day moving average, okay, and the highs from October, all lined up right here. So the reversal that we saw last week and the kick to the downside certainly to me had merit. Now, note, and one thing I do want to just really point out is the broader picture here could certainly be shifting for pound Kiwi. And while yesterday I put out that scalp with a downside slope on the near term, I'm just treating this as a correction. Guys, the divergence, the ongoing divergence we got all through the lows in October, all the way into the start of this month, really suggests that this thing has a little bit more upside to go. And I think you eventually look for a breakout here. On the near term, though, this is the structure we were following. Now, as I noted in yesterday's piece, it's too early to rely heavily, okay, on this pitchfork, but certainly did pan out well for us last night. So here's what we were looking at. Bring this into an hourly chart for you just to get you the better picture. But basically what we were saying is, look, if this slope is in place, we should be looking for a rebound off the median line. With our break below 74.85 really needed to validate continuation for the downside. Well, you broadly held that median line, quick dip below it, rebounded just ahead of the basic 100% extension, and here's the rebound higher. Looking for near-term resistance at the weekly open. Broader bearish invalidation at the weekly opening range high. As long as we stay below 77.10, 77.20, I do think you get another leg lower here in pound key. Sort of the other side of the trade. If we break the weekly opening range high, I don't want to do anything here. We'd need to clear the high day close at 77.74. This is what we need to clear to get back sort of on the bullish side. Okay, that's the level we need to get clear of on the long side. That being said, look for some near-term resistance heading into the weekly open. You're basically looking for a break below that 74.85 level of support. Any questions on pound key? Okay, sort of taking things into account, just looking at the broader picture, kind of makes sense with what we were talking about with Kiwi dollar, right? Kiwi just tested the top side of the weekly range. It's coming off a little bit, that weakness, fueling some upside in Kiwi. And sterling key, you know, this could come into this region, pull off a little bit, see one more stretch higher, but basically looking for some exhaustion as you head towards that upper parallel. Okay, so we did a quick run through on the dollar yen. We did a quick run through on DXY. 1, 2. Kiwi dollar was 3. Sterling Kiwi was 4. Let's take a quick segue to sterling yen here for Amir. It's number 5. Okay, if there are no other questions on pound Kiwi, again, guys, as always, feel free to take a snapshot of the screen if you do need to refer to these levels. No change to any of the targets that we noted yesterday, though. You know, we kind of just followed right along. Here's the rebound. The only thing I don't have on this chart from yesterday, guys, is this buy sector. This is just the 50 line for the same operative slope. It converges on the weekly open. Okay, that's right here. And again, just keeping in mind the broader picture of where we turned from is resistance on the daily chart. Quick jump over to pound yen. Here's what pound yen looks like, Amir, from yesterday's setup. So the daily chart. Okay. So here's what I want to say on pound yen. The rally that you're seeing today, the reason I'd be concerned, Amir, about getting too aggressive on the short side, well, first of all, you're coming into the highs right now. So look at that 141.70 barrier basically as just a basic initial resistance. Not sure where you have your stops on that entry at 141, but this is what I want to say. Well, let me just take a step back. Objectively, just looking at price action, this clears the initial weekly opening range highs and the weekly open on this stretch to the upside. So I'd be too concerned trying to fade this move from here. Momentum's also breaking above 70. You see this on the hourly chart? Here's what happened the last time we crossed 70 to the upside. Okay, even the pullback from that was very shallow before continuing higher. So I would be concerned about being short on a condition on a topside break above 70, Amir. Again, just my personal opinion. He says, let me read your entry. He says, I also tried to short it this morning at 139 with a very tight stop. When it broke 139 to the downside and retested RSI on the daily, also broke 70. Was it a good thing to try? Just wanted to learn if my initial entry was validated or it was a wrong entry. Amir, great question. And I'm just going to make an example of it just because I think this is a common mistake a lot of people make. So when we're looking at the daily chart, Amir, it's absolutely critical. I know exactly what you're talking about. You're talking about this right here. It looks like this broke back below 70. And if that was the case, you'd be 100% right. That is definitely a bearish signal. But what you need to always remember, Amir, is that all these oscillators only get pinned when the candle closes. So until the daily candle closes, I can't make any assumptions on whether this is breaking support, rebounding off support. I don't know, because this only gets pegged once this candle closes. That's the point of why we go into intraday momentum. We look at a 30-minute chart. We look at a 5-minute chart, right? Because the RSI signal or any oscillator you're looking at for momentum will actually get pegged. So you'll get that signal verified quicker. Whereas if you're looking at a daily chart, I can't make any assumptions until the daily candle closes. Very common mistake. I can tell you I've personally made that mistake early in my years a million times before someone drilled it into my head. This is way back on the years when I was sitting on the trade desk, and I would say the same thing. What the heck? This just broke and gave me a signal. I went short, and now it looks like it never even made a move. And I had to get, thumped over the head a couple times before the older guys would laugh at me and say, hey, come look at this, So, Amir, keep that in mind, okay? He says, that's the catch. I rushed it. Yeah, as far as if you're looking at a daily RSI signal, absolutely, you need to wait for the close of the candle. So if you're trying to look for near-term signals, go back into a tighter time frame, a 30-minute chart. If you're looking for an intraday position or an intra-session, Amir, drill down to that 5, that 10. You'll get the signals a lot quicker. And I think what we talked about today with that example here on Kiwi was a perfect example of just that, right? Amir, does that help? Does that make sense? He says, yes, mate, thanks. Hey, I'm more than welcome. Good question. So that's what I want to say on that. I don't want to shake you out of the position because you're still holding 141 as resistance broadly right now, right? But just watch the daily chart that we highlighted yesterday. This is still resistance, okay? The high day close, a basic 236 retracement. This is off the decline from the highs that we made back in June of last year. And one other thing I want to note is that we're making right now a daily outside day reversal candle. Now, typically, these can be very beneficial if this candle was at the lows. I mean, outside bullish candle off the lows or an outside bearish candle at the highs. An outside bullish candle at the highs can oftentimes be exhaustion. So, Amir, I'm split. I wish I had a more conviction trade or a more conviction bias for you. All I can tell you right now is that you're testing near-term resistance. And if we hold above the weekly open, I'd be concerned about a little bit more of a contentious breakout to the upside. The next target, by the way, if we clear 141.60, which is that basic 236 from last year, you're looking for this. This is basically the highs from July and the 200-day moving average. You're looking at 143.90. 143.20. Big range ATR, right? Not for the faint of heart. So that is pound yen for your consideration, sir. Okay. Yeah, you're more than welcome, Amir. And for pound yen, says Eileen, how much weight to give the yen weakness? Yeah, it's a good question. Let's take a look at this. You actually sparked my interest here. Let's see what the yen performance is, just yen. So here's what the yen's performance looks like. And in fact, Eileen makes a great point, right? The yen is actually weaker against all its major counterparts, with the pound being the biggest gainer today on the yen, 1.57%. So Amir, looking at this, there's another reason you're essentially trying to fight the strongest performer versus the yen on the session. So another reason why you might want to curb your expectations. That being said, resistance is resistance, support is support. Okay, but just note that it is sort of the biggest mover versus versus the yen today. Good point. Eileen says, okay, and the text always. Yeah, I mean, price action is always going to drive, right? But this is actually a really good point to bring in. A lot of times when you're looking for a candidate to fade a move, so if a rally is extending, you want to take a short and kind of play the downside for near term. It's called fading. Whenever we're looking to do that, it's always a good idea to kind of check the performance of the day to make sure you're not fighting the strongest performer. That's just, you're running into the situation where you're essentially trying to call a high. Amir says, should my stop be 141.56? So if I was in that position, it would need to be, essentially, yeah, I'd have to have it against the highs here, Amir. Again, make sure when you're entering the position that there's a trigger to put you in. I know that we talked about the break below 70. That's what faked you out, right? But I essentially would be looking to hold against yesterday's high. Or last week's high, rather, excuse me. Extend it out a little bit higher into the 70s. If it breaks that, you're likely to see that run right into 43.23, basically that 200-day moving average confluence region. Hey, you're more than welcome. Cheers. Okay. Moving right along on the list, KiwiCAD. KiwiCAD was the last Kiwi setup from yesterday. This is number 6. Here's what KiwiCAD looks like. All right. So very basic setup. Again, similar to what we were looking at with the Kiwi. Here's what it looked like last night. So if you guys remember, we highlighted this trade back on the 21st, I believe. Take a quick look. Here's what that setup looked like. We were basically highlighting this key support region. This is back on the 23rd. Okay, you had the 2016 open, a basic 38.2 of the entire yearly range, slope support, and all converged right here in 94.33 into 94.23. Okay, so heading into last week on the 21st, we said, look, the short side's at bias. Any way you slice it, the short side's at risk while you're above this region. Look for a rebound. Basically, we sat there last week doing nothing, chopped sideways just above it. We're finally getting that bounce higher, and we just tagged this former resistance slope as resistance here today for the last couple of days. Here's what it looked like last night. Okay, you saw the weekly open, pulled back. We still held that slope support. That's this red line right here. The 100-day moving average continued to offer some support as well at 94.77. And again, the risk was for another pop to the upside, 95.93. Okay, is what I want to highlight as major key resistance. It's the monthly open. Very nice pivot in price. I'll show you the near-term chart here in a moment. Looks like this. Here's the 2-hour. Let's actually go to the 4-hour. Okay, this slope here, look at that median line comes in, kind of just pivoted through. I don't like that we're pivoting through it right now, but the point being, you're seeing that the support held just above that longer term slope we looked like on the daily chart. So the weekly opening range has taken shape. Again, as I said earlier, the Kiwi cross here, I don't have any positions on this. You actually did get a decent long trigger off that, but long story short, very clean weekly opening range. I would play this as a range until such time where we get the break above the monthly open or break below key support. Broadly speaking, I favor the downside. Near term, I don't want to rule out another rally or another attempt to test that high. And I did this with you yesterday in the webinar, I think. If you take a basic retracement, just to kind of gauge where you would look for resistance, there's the monthly open, and that pivot in price just higher is a basic 38.2 at 96.17. So basically you're looking at the 96 region as an area of which, if we're going to turn lower, that's where you'd want to see some near-term resistance. So we'll see if we can't get play. The thing that's confusing me here, or the thing that's throwing me off, I don't want to say confusing me, the thing that's throwing me off here is the CAD. Not so much Kiwi, I think. Think some of that near term, we saw some CAD weakness here, kind of keep this thing curved. Questions on Kiwi CAD before we move off. We will go over dollar CAD. Let me jot that down, actually. For dollar CAD, it's going to be a double whammy Friday. I love when this happens. You get the NFP print and Canadian employment data all at the same moment. And when those two diverge, or if you miss on Canada and beat on US or vice versa, you could see some real radical price action in dollar CAD. And keep in mind, not only that, it's going to be the start of the month too, so you're just opening up December range. So for sure, we'll be taking a close look at the CAD crosses as we get closer to non-farm payroll Friday. All right, let's take a look at the previous update from the intraday page on Sunday, which was a special look at the Aussie crosses. Yesterday was Kiwi crosses. Sunday was the Aussie crosses. So let's start real quick with Aussie dollar, which is the operative one. Here's what the trade looked like on Sunday. And here's what the trade looks like right now. The basic premise was, look, major resistance into 75, specifically 74.89 into 74.98. The actual high was exactly 74.97, just one pip below. You had the median line here off the highs. You had a very clean 100% two equal legs up as far as a correction play here in Aussie. You had a basic 38.2 of the monthly range, and they all converged right here, okay? Right along the median line off the high. So as we started the week, as we said, essentially looking for that rally here to offer some resistance. Broader bearish invalidation for the broader daily chart is way up here at 96. But that being said, this was initial resistance. Here's what it looked like on the 4-hour on Sunday. We're just opening up the session below that 50% retracement. Again, that was 74.61, 74.89, 74.98 was sort of the sweet zone we were looking for as far as entries on the short side. Here's what it looked like on the 60-minute on Sunday, and here's what it looks like now. Okay, so we briefly talked about this yesterday on Daily FX. You know, we were holding a short. I actually got stopped out at break even on the rally here during the U.S. trade session late in the session. Last night, again, on another attempt into this key region, there was clear divergence on the hourly chart. I will show you the 5-minute chart in just a moment as well. And that was telling you, well, you know, this thing looks like it's getting tired. Price action just made another high on a closed basis. No wicks. Line chart. Higher high. Lower high. And you even had a decent trigger break. I wasn't really looking at the hourly trigger break. I'll show you the one in the 5-minute in a moment, but it was kind of messy right there. And then once we came out to check resistance, it kind of held the underbelly of that. So as we made that second divergence reference point, it was sort of a nice kickoff point to push off. So we're back in that trade again after taking that break even yesterday. I have been peeling positions off it all morning. Stops are above the European highs. Actually, I'll just show you the live chart. Here's what the 5-minute looks like and the 1-minute. So here was the divergence that you saw yesterday into the Asia high. So here's your Sydney Open. Markets rallying. Higher high, higher high, higher high. You start to hold the highs in momentum. In fact, make a slightly lower high. Clear support trigger break on the near-term chart. And these are your favored, always going to be your favorite signals. Divergence into a support trigger break. That's your entry. If you miss the initial entry, no problem. Look for the zoom in retest, which we always say, which means we're going back Check it, failure, momentum, couldn't even make it up into 60, and that was my position to jump in. Real tight stop against the highs. Look for, why is my quarterly ATR not coming up here? There we go. Looking for about 21 pips per scalp. So don't mind this. This is just positioning adjusting on my standpoint as I start to see the market start to move. If there's any hesitation or price at that point had already gone to oversold territory, I just start to adjust essentially the leverage. I'm not really looking to book a 6-pip profit, but I kind of want to lower the leverage on the position. So I'll end up doing that usually before I call it a night. Once we got the initial 20 pips, took some off, stops went to break even, almost got stopped out here. And here we are again, kind of peeled some more off on the way down. So stops are just above, here's the, in green, the London highs. This last exit here was right at the open. Okay, so here's Aussie dollar. Here's the weekly open. And that's kind of where I wanted to take off another quarter of that position. So we'll see how this pans out. Still holding within the confines of this ascending channel formation. So essentially you need to clear Friday's low. You see this swing low right here? Whoops, wrong line. That's your support. Okay, and that puts the next downside target right around 74.20, which is where I have the rest of my limits on that specific intraday position. Okay, you had plenty of opportunity on some other crosses too, which we'll jump into in just a moment. Aussie CAD showed a nice pullback after that false break on Sunday. Again, CAD being the variable there, but a break below 74.20 is what's needed to really offer the reversal trade for Aussie, shifting the focus right back to these downside targets. Okay, if we clear this, look at the 200-day moving average, look for 76. Not my favorite move, but that's the contingency plan if we clear 75 on the upside. That basically takes you guys into here. Questions on Aussie? And you're pretty clear as far as Aussie Day is concerned for the remainder of the week. You do get retail sales on the 1st of December. And the RBA is on tap early next week. All right, going once, going twice. That's Aussie dollar number 7. Number 8, let's just take a quick run through on Aussie CAD. I know it's an interesting pair, but we've been following it for a while. I just wanted to give you guys an update. So the Sunday report, again, basically highlighted for Aussie CAD this major key resistance level, which was the 2016 open, a basic 38.2. That was 10063 into 10065. You saw a false break here early in the week. Okay, here's the Sunday, popped right through on Monday, came right back and closed lower on the session. The risk still remains lower below the yearly open at 10060. We broke this near-term slope support off last week's low, kind of drifter. Okay, you're looking for support near 99.57, and that's an area of which I start to look for more a stronger support level or a rebound in Aussie CAD. Here's what it looks like on the intraday now. Bring it to a 2-hour chart. A little bit of a messy setup, but just keep your eyes on the horizontal levels here. So again, nice little pivot here at parity, essentially is support, near-term resistance 10060, and you're looking for a break of this near-term range. If we see a downside break, I'd be looking for support here. Like I said, 99.55, 99.57. A topside break, you're looking for continuation into 101.20, 101.29, and 101.90 would be a nice 618, the monthly open, and slope resistance. Immediate risk is for another drop lower here. In fact, let's just take a quick look what the 100% extension looks like. Okay, I don't know that this is a concrete high for now, but keep your eye also on that 99.74 level. Open that up a little bit. Questions on Aussie CAD. That was number 8. Number 9, Euro Oz, and then we jump into your questions. Here's what Euro Oz looks like. Just a quick update from earlier in the week. It's been a slow grinder. It kind of melted lower. It broke last week's low, which technically would have had me looking a lot lower, but here's the fizzle out, and here we are just rebounding. This slope now has no bearing really for me too much, basic trendline support, although the resistance levels held really well. I'm going to go on a neutral stance here as far as Euro Oz is concerned. So if you're looking at the report from Sunday, here's what it looked like. We're looking at this possible ML formation, noting that it was too early. We broke below it, broke below 41.83, recovered back above. I'm going to go neutral here on Euro Aussie, citing the possibility for a slight upside bias here before this thing turns over again. So I still do think you can move higher. And in fact, if you look at the momentum signature here, it's pretty strong divergence. A good example of why you don't want to just run with divergence, right? Because the one thing that divergence will never tell you is timing. Divergence can show and be in play for a day, a week, a month. Doesn't necessarily give you any indication on when the market's going to turn, just that momentum is waning. So here's a perfect example of where momentum continues to hold 30 support, 30 support, 30 support, all throughout lower lows, lower lows, lower lows. So I do think you can get a rebound here. Do I have conviction or a setup per se? No. You're right slap in the middle of the weekly opening range right now. So sit this one out for now, guys. Let's see if we can't get a clearing of this weekly open with a rebound higher near term favored in Euro Oz. All right, questions on Euro Oz, number 9. Okay, so into your questions. D, I know we covered dollar yen early in the session, but I do want to touch base on it real quick again. For anyone who joined in late, here's what the dollar yen looks like. It's a trade that you're going to want to pay attention to certainly into the end of this week, okay, with the core PCE numbers that are coming out tomorrow, ADP coming out tomorrow, non-farm payroll print on Friday. Certainly, the dollar yen is going to be one of the stronger reactors to U.S. economic data, as typically is the case. And as such, you really want to pay attention to the stretch higher, which just continues to hold in the pair. So as I said earlier in the session, you might have seen Jamie gap 113, 20, 113, 16. That's the gap that we made on the Sunday open, i.e. basically Friday's close. We just came into that, and it seems like it's giving some kickback. Bottom line, 113.63, like I noted earlier in the session, that's what needs to be cleared on a closed basis to get the validation for a push higher towards this topside target. As long as we stay below that region, it's at risk. Remember yesterday's webinar, guys, and Jamie's piece from Sunday, the mad as hell trade, right? This is exactly what it dictates. Guys come out, clear out of that position, trying to call the highs. We retrace back into the previous day's range. And if this is going to be a concrete near-term high in price, you kind of want to see a pull-off from this ratio, from this level, rather. So I still think the long side's at risk, any way you look at it, for dollar yen. Long side's at risk, sub 113.63. And I know, Eileen, we were talking about the fact the yen weakness story, right, which seems to be a prevailing theme throughout the course or throughout the majors today. Doesn't matter to me. We're at resistance. So I just want to curb my appetite for that bias. Clean this up a little bit. Okay, Conwall, let's take a look through the commodities for you, sir. Hello, sir. What about crude and silver? So crude looks like this. As far as crude is concerned, look, OPEC's on tap tomorrow. It's interesting, Conwall, because we were talking about this yesterday. I think you were in the webinar with me, right? The monthly open, former support, now resistance. It was messy. I can't say it was beautiful, but we rallied through into the U.S. trade session, then collapsed. I don't want to call that basically a good hold and reversal, but on its face value, it's basically a failure to break through the monthly open again. Still looking at 44.85 as near-term support there. Conwall. That's the level you need to beat. That's the key 618 retracement of the advance off the lows. Also have some slope there from a previous slope dating back to the highs we made in October. I think it's pretty self-explanatory. You know, you're at risk while below the monthly open. You need to see a break below 44.85. Here's what the daily chart looks like. It's, again, I know not the cleanest chart right now. There's a lot going on here, but just keep your eye on the broader structure. So not the cleanest median line bisector, but support, break, gave you a run. Resistance, the break gave you a rally. Yesterday couldn't close below it. Today's break, look at that 100-day moving, 200-day moving average, just lower at 44.75. Well, we just highlighted 44.85 as the 618. So you're basically looking at this support range here near term for crude. And a break below this really shifts the attention right back to that basic trendline support off the lows from April. That's like somewhere in the range of 43. Okay, I wouldn't take any really aggressive stances on this heading into OPEC. You know that, guys, I'm not a big event risk trader as far as trying to use these events with OPEC and all this nonsense as a justification for a trade. But with where we are right now and the amount of sort of publicity that this is warranted from the market, I would just use some caution about taking any aggressive stances on crude heading into that. They're basically, the discussion is going to be on the supply side and what kind of production cuts may or may not happen. So we'll see how that pans out heading into tomorrow. Conwell, I appreciate that. He says, but your levels are awesome. Eileen says, if U.S. trade in crude and metals, do the futures charts look similar to the FXM charts you use? Absolutely, Eileen. In fact, the CFD is just a derivation of what the futures markets are doing. So broadly speaking, yeah, you should see them pretty much. It's going to be it's going to be very close to the front-running contract in futures. Okay, should pretty much be more or less in line. So that is crude. Well, have to call the trades, the Conwall trades, as far as the commodities, right? Conwall, you're getting some fans here in the room, my friend. And just for the sake of correction, Eileen, it's Conwall with a K. I want to make sure I'm doing him justice. All right. So let me do this, Conwall. Let me jump over into dollar CAD since we're talking about crude, and then we'll come back to the metals, right? So since we're looking at crude, seemingly seeing a little bit more downside in the immediate term before this thing could probably level off, you know, that's CAD strength to the downside, right? Or crude weakness is going to be weakness in CAD, which is dollar CAD strength to the upside. Here's what dollar CAD looks like near term. If it wants to load. There we go. And I know that there's been you know, a lot of people trying to call the highs on this. You can see that easily just by scrolling through your Twitter handle. I'm sure there's people all over, you know, kind of levered to the hill on this. Guys, you know, we don't want to get too excited on anything. Price is always going to guide everything. I can't, you know, stress that enough. In everyday trade, the only thing that matters is what price is doing. And as we noted earlier in the month, rather, I think this was updated. Intraday charts, dollar CAD, right here on the 21st. Okay, it's the same slope, same levels, not a damn thing has changed. Okay, basically the major key support that you need to keep in mind for dollar CAD is de facto going to be that 133.67, 133.75 level, huge confluence region of support. We talked about that last week on the 21st with the downside bias at risk into that region. These slopes have continued to be super fruitful. In fact, this drop saw another tag into that support region before moving off. Nice pivot here on this median line. We're still holding that slope. So near term, yeah, this thing could travel right back into the weekly open. That takes you back into like 34.98. Basically sub 35, you're still at risk in dollar CAD. You'd need to see a break above 35.25, basically the opening range high for the week, median line resistance, to invalidate the short side bias. You need a break below 33.67 to validate continuation lower in dollar CAD. That's this region right here. In such a scenario, you'd be looking for a drop all the way down here. There's really not much on tap. This thing's been coiled up like no one's business. Again, I'm not a super dollar bear. I'm not going to be that foolish as to try to call a high on this, but at the end of the day, those are the levels. If 133.68 breaks, there's really not that much to hold this thing up. So what does this mean? Near term, CAD weakness, crude weakness on a move lower? Sure. Look for this thing to probably travel a little bit higher. I'll be looking for some resistance near the upper parallels. That's dollar CAD number, well, we did crude. That was number 11. Dollar CAD number 12. Any questions? All right. Let's look at silver for Conwall as well. Here's what silver looks like. So the only thing, Conwall, that kind of really turned me on to this, and we talked about it yesterday, was just the reversal of where yesterday's high was. It was too textbook. You see that right there? Literally. Perfect tag of the upper or the actual concerted median line off of the highs that we made. Very, very clean touch. Now we're heading back into confluence support right down there. Okay, near term, again, I don't want to tempt anyone, but this is how you'd want to play it. Near term, looks like you could be putting in some sort of near-term technical formation that would give you a neckline of right about here, which would suggest if you see a topside break above the highs that we just made yesterday, you'd be looking for a measured move. Target would take you as high as 1757, actually. Okay. Way too early to tell. I do not want to tempt anyone to calling this a head and shoulders, inverse head and shoulders just yet. But the contingency plan would just further highlight the highs that we made here. And if it does break, that measured move would take you into, well above that 1740 level. Near term, let me just see if there's any structure at all to this advance. Had a feeling that was going to catch it. Okay, that's pretty cool. So it's 618 of the range. Looks like you caught the high exactly and literally right now, almost catching the low. I'll be working with this slope right now, and if we are, that's going to further highlight support right around here, near-term bullish invalidation. Ha! Look at that. Okay, bear with me one sec, guys. Okay, this is going to get a little messy. The low day close. The low is 1680. 18, the low is 16 would be here. So this is the actual low close. Not the low day close, but the close low. And if we bring that to the intraday chart, it coincides right on that same level, okay? That's what I'd be looking at near term here, Conwolf. So for support, you're basically looking at it right now, man. You're basically looking at it right now. Bullish invalidation, 1627. Ooh. Okay. You might actually get a drop down there. I'm going to go ahead and remove this retracement because 2 equal legs off the high, if this is correctionary, puts you back at 1628. Further highlights 1627, 1628 as near-term support and broader bullish invalidation for the near-term upslope. Obviously, the broader trade is bearish, right? We broke a trendline support dating back to the lows that we made basically for the year here in January. So, you know, any way you slice it, yeah, the broader trend still remains to the downside. The whole point is being, is this correction, does it have more juice to go to the upside before it turns around? Basically, you're looking for that support to hold while above 1627. And that's silver for you, Conwall. Let me know if you have any specific questions on it. Very interesting setup. Again, I just eyeing this out for the first time here. I haven't really actively traded silver in a while. Make sense? Okay, so guys, if there are no other questions, if you have any questions, feel free to throw them on the message board now. If not, we will be back on board again Thursday. Kamal says, so their range, so the range is, I wouldn't necessarily put this in a range per se because the weekly open comes in right here. Where's the weekly open? The weekly open's right here. And we're basically breaking the weekly opening range lows right now, near-term support. So if it does break, watch for that drop near 1630 to be support. Let me drop the marker for you as far as the weekly open. Yeah, it's trying to break the weekly lows right now. I'd be looking for support at one of these two levels here into the U.S. Open. Wait till the market opens, Conwall, to see how this reacts. On a drop lower, wouldn't be too surprised since the dollar is seeing a nice little pop here on that release earlier today. If the market opens and it pops a little bit lower, I'd be looking for some entries, possibly near that confluence support area. All right. All right, guys, we'll go ahead and wrap things up here. You got about 60 seconds here ahead of the U.S. Open in New York. Again, Jamie will be online normal time, guys, tomorrow with the midweek strategy webinar. I'll be right back on here for the intraday strategy webinar on Thursday morning, 8:30 Eastern. Obviously, the updates will be unchanged each night. Till then, best of luck trading, and I'll see you then. Cheers.